Good morning. Well, let's get started. Sorry we're a few minutes late. We had a little challenge with room mix-up, but we're good now. Good to see everyone. So real quickly though, how many of you are new to these FX Street sessions? You know, relatively new. Yeah, I've been delivering these for years now. We go over one strategy, and it's okay. So a few of you. And again, just a quick recap of what we do here. So the strategy that we use is around pure supply and demand. So looking at the price charts of any and all markets and identifying price levels where supply and demand is out of balance. In other words, specifically learning to identify the picture that represents where banks and financial institutions are buying and selling in the market, so we can buy and sell there too. The strategy comes from many years ago when I was on the floor of the exchange, really teaching myself to identify. When you have the orders in front of you, like I did in the beginning, being on the institution side of the business, you know exactly where the orders are, right? And that's where prices always turn. So I simply train my eye to see those same orders on a price chart, and that's what I try to share with you here during these sessions. So if you're new to the sessions and you want kind of a back to basics type lesson, just there's plenty of archives. So I think we're good. All right. I have this chart up. I'm not going to spend much time here. This is a position I'm currently in, and it's something I want to, we definitely focus on Forex here more than anything else, but I want to go over something with you here. So this is a position that I'm currently in. This is putting on a bearish trade right here at supply. This is in a stock. So it's an options trade. It's a bear call spread. So some of you may know what that is, but I think the nice thing is, and it's a new way of doing this that I do for myself and others. The money that was used to put this position on, or I should say to put at risk in this position, came from interest payments on very safe bonds, if that makes sense. So you know how most people, right, have their money invested in the stock market or in a 401k or some in some way, shape, or form. Most people's retirement money is, a ton of it is in the stock market. Instead of doing that, a much safer and I would argue much more profitable approach is to take all that money out of the stock market, put it in very safe bonds that we can go over another time, and with those interest payments, make those same bets on market moves. And it doesn't have to be just the stock market. Does that make sense? So in essence, you're able to use kind of free money to put these positions on, which is what I'm showing you here. That makes sense? And again, there's a lot of details around that, but I just want to kind of give you that high level, give it to you high level, and then we can go over it, Okay? Yeah, so I'm in this, and again, with the options strategy, what's nice about that is, in this position, yeah, price is falling, and that's great. It's very profitable at this point. But with the strategy I put on, now the core strategy is all around supply and demand. That's what made this work. But the strategy I put on, I don't even need prices to fall. So I'm not necessarily betting that price is going to hit this level and turn lower. The real bet is that price is going to hit this level and not go through it too much. I can have prices hang out up here right around the supply level and still achieve maximum profit. So again, there's the conventional ways that most people trade and invest their money, and then there's the way Wall Street does it for Wall Street. What I try to enlighten you on each time we're together is, here's the Wall Street approach. Here's the professional approach. Okay. You can use binary options, Mark. I don't. I'm not into them. These are just conventional bear call spread on this one. All right. Now, if you know options, yeah, I'm going to make less money on the bear call spread than if I did a directional trade here. Okay. So I could have made more money if I just would have traded, just done an outright directional trade. But I don't need to do that because I know I'm getting, 4 to 6%, a lot of that tax-free on the bond side. So my goal doing 1 or 2 of these positions a month is to get another, anywhere from another 10% or so out of these positions, right? Out of these positions for the year. And if I can end up with a year with a good, anywhere from maybe, I don't know, 13 or so to 18% return, very, very safe on that kind of bigger money, we're good, right? Give me just 1 second here. All right, sorry about that. So does that make sense to everybody? And again, I don't want to spend our whole time on this, but let me just one more. Sorry about that. Apologize. I actually had an alarm that went off next to me here. So not a trading alarm, but I think we're okay. All right. Sorry about that. So again, I don't want to take up too much time here with this, but I think it wouldn't be right if I didn't at least expose you to just another way of doing things. In my view, something really everybody should be doing with their bigger their wealth bucket. Okay. So now tying into core strategy, we can take a look at this. Look at the supply level itself. Let's go over our odds enhancers. First of all, for those that are new to the program, we determined that supply exceeds demand here, that banks are sellers of this stock at this level because price couldn't stay at this level and fell away. Now, what we can do much better than that, though. We want to quantify how out of balance supply and demand is at that level, okay? So to do that, we go into our list of odds enhancers. Number one, how strong was the move in price away from the level? Okay, so one of 2 things can happen. You can have a gradual move in price away from the level, or you can have a stronger move in price away from the level. Ultimately here, we have a gap, right? A gap in price represents the strongest possible move away from a level. So that's good. So odds enhancer number 1, we're good there. Number 2, how much time did price spend at the level? Would you say that's a lot of time or just a little time? All right, sorry about that. So again, how much time was spent at the level? Would you say that's a lot of time or little time? Just a little time, right? Yeah. So the fact that price, if you read, a lot of people, and I'm sure a lot of you have read the trading books around support and resistance, right? Conventional technical analysis. The reason why you never hear me talk about conventional technical analysis is because it's a very flawed school of thought. There's many reasons. I'll give you one of them here, which is why you don't see anybody making a consistent low risk living every year using conventional technical analysis. What the trading books say when it comes to time at a level or time at a price point. When you think about those conventional terms, support and resistance, right, the books say, look for areas on the chart where there's lots of trading activity, many candles on your screen, above average volume, right? Well, when you think about it, when you're looking for your strongest levels, actually the opposite is true. But the books tell you have it wrong. So at price levels where supply and demand is most out of balance, are you going to get lots of trading activity at that price point or very little? And Walker, I'll get back to you in just a minute. You're going to spend very little time there, right? Okay. Opposite of what the books say. Think about it. At price levels where supply and demand is most out of balance, you're going to get very little trading activity, like you see here. Okay? So the less time price spends at a level, the more out of balance supply and demand is. So the fact that you had a gap away from this level, very little trading at the level, and then we have the pattern itself, and there's more odds enhancers, but that's enough. We don't really even need any more for this one. But one of the biggest, two of the biggest ones that I'll go over are, it needs to be a fresh level. So prior to price coming back to this level, which is where I entered this position, it was a fresh level, meaning price had not been back there at all. And number two is profit zone. There needs to be a big profit zone. So below current price, the only area where we may have some demand is right over here around 66, right? But there's probably not much demand left there because price has been back already, okay? So when price came down here, a lot of it, most of the demand over here was filled. So now when price comes back to level for our entry, we expect a pretty quick move down to at least this level. And then if we expect it to go lower, we just need to look at the chart and see where the demand is. Does that make sense? Walker, you're asking if JP Morgan is in a downtrend. Depends on what time frame you look at, but the whole concept of trend is irrelevant to our conversation. And I'm not saying your question's not important. Your question's great. But if I have a fresh level and a significant profit zone, trend's not going to change that, right? So, trend is important. I love the word trend, but for us, when prices are trending, we want to be in that position already and making money. Okay. If you think of the definition of the word trend, it's just prices moving or something moving. So I wouldn't get too hung up on trend. Remember, price had to, for example, we're looking at a 180-minute chart here. If I pull this on a 60-minute chart or 30-minute chart or something less, from this point at 66 all the way up to the entry, you're going to see a beautiful uptrend. So one might say, well, wait, Sam, you're shorting or selling in an uptrend. That's against the rules. Well, no, the strategy is to buy low and sell high, which means on one time frame or another, you're always going to be buying in a downtrend and selling in an uptrend. The reason why it's typically such a big deal for people is because the average person is taught to buy when prices are going up and sell when prices are going down. That's the opposite of what Wall Street does and banks and financial institutions do. They want to buy when prices are down and sell when prices are up, right? Okay. Yeah, Eugene, so we do have a pretty nice profit zone. Again, these candles here are not demand. Those would never meet the definition of demand, so we expect prices to come quickly down to 66. And then when price gets down there, there's really not a whole lot to stop it from coming down to the 65.50 area. Okay. So again, I know we spent quite a bit of time on just kind of basic core strategy, but I saw there are some new people with us, so I want to make sure we we have that covered. Sure, we can start with the Aussie if you like, and let's go to the 1 hour. Sounds good. All right. Here we go. Just waiting for one more chart to come up. Just give me a second here. Oops, there we go. Um, 69, yeah, we can take a look at that in just a second. I'll go back to that in just a few minutes, okay? This is a very exciting webinar. One of the most exciting ones in a while. Had a fire alarm go off. Spilled a drink. So I guess it's good that it all happens at once, right? Okay, here we go. Nothing boring about this webinar. No, I'm kidding. The markets are flying today. It's a great day to be looking at markets. Yeah, so Rick, that's we just went over some of the basics around that, but again, I would encourage you to go back and watch some of the recordings. All right, here's the Aussie dollar. I think someone want to look at the hourly, and we probably want to go down a time frame here. So bought around 73. So down in here, right? So we kind of came down into, oh, I got what you're saying. So we're looking at the hourly. So we had a demand zone here, base, strong rally again. This is just the opposite of the one we just looked at, the short. Very little trading, strong rally away from the level. We had the pattern itself. Price dipped into that level, and there was no clear supply until up in here, right? So my guess is your level, did you have your level in probably like that. And then we do have some supply up here, or at least a nice initial target, if not a full target. Was that your level? Was that your trade right there? Oh yeah, we can certainly look at the booms in a moment. Okay, so is that the trade you had there? So it's always a good idea to you see how price is kind of struggling here at supply. It's always a good idea to get out just before the supply zone, not at the supply zone. The reason being, you have everybody can hear me okay, right? Reason being, you have competition to sell at supply, right? So we don't want to sell when there's competition to sell. We want to sell when there's competition to buy. So nice trade there, but that one's over with. So let's go down to a small time frame and see what we have. My guess is you're going to have another opportunity here. No, maybe not. All right, let's go to another market and let's try to find a trade that is not set up yet. Nice job on that one, by the way. Yeah. So let's go to the Bund. Yeah, Eugene, we'll do that with this one. So if we go to the larger time frame, let's start with the daily. We see we have, so this is a good one. So just looking at this chart, are we closer to larger time frame demand or closer to larger time frame supply? Let's see a few people answer here. Are we closer to larger time frame demand or closer to larger time frame supply? So real quickly, if we look at this one, remember we're talking about fresh supply, right? This pivot high right here, that's not supply. Okay, so we do have a little demand right here. Okay, now price just barely moved away from that level yet, so we'd want to see more of a rally. And where's our nearest supply level? Remember, for those that are new to the sessions, this is not supply right here. We would never call that supply. Okay, that's not a supply zone, and certainly not a fresh supply zone. So the trading books would call that resistance, but again, they have it completely backwards because, you know, trading books say don't, for example, trading books say don't buy your first time back to support, price support, or don't sell the first time price goes to resistance, let the level be tested a few times. But what is that really saying? What that's saying is don't buy or sell at the level when it's strongest. Wait till it gets weaker and then buy and sell. Does everybody understand that? Okay. So looking at this chart, and again, we're on a pretty big time frame. We would expect prices if they came down a little bit to then turn and rally higher. So that's the larger time frame, supply demand curve in this market at the moment. Now, what does that say for interest rates? Remember, since the beginning of the year, we've had almost every leading economist out there tell us that interest rates are for sure going higher this year. Has that happened? Has that happened in a big way? Have we seen this dramatic spike in interest rates? You've got Federal Reserve people that are guaranteed it back in January. But what has the chart been saying all along? Right? Makes sense? You see what I'm saying? Again, what I found over I've been doing this for about 24 years is don't listen to anybody, including myself. Just focus on what the chart is saying because the chart doesn't lie. What tells the truth is supply and demand. That's where you see it. That's where you see the clear picture. Okay. Right? Is there competition? Is the chart telling us there's competition to buy bonds or competition to sell bonds? Right? Buying bonds, right? So far, that's what the chart is telling us. Okay. All right, so that's the boom. Now let's go down to smaller time frames. It doesn't mean we're not going to have a shorting opportunity on a smaller time frame. Let's just go have a look. Okay, so even when we go to this time frame, right? We've got the hourly chart here. Okay. We are up into this area. Let's scroll. Let's put a horizontal line up here and scroll left. Okay. And now let's blow the chart up a little bit. So now we're looking at all this price action up here. If we're going to, do we have any fresh supply levels up here to sell short against? Looks like there's a little something here at 156.50. Probably a nicer one is up here at 157.70. See that? Yeah. So you have like 2 or 3 supply zones on top of each other here. So I forget, I'm sorry, whoever asked for the boom, but that's your larger time frame look. And then if you're looking for supply levels, above 156 is there's some supply levels up there. Okay? And that's how we would work from our largest time frame down to the smaller time frames. Let's go real quickly, though, just because you can actively trade this market. This is a great market. Let me just pull this down to a 5-minute chart. Actually, let's go to a 2-minute chart. Yeah. Well, on the 5-minute here, I would really watch this. Notice how price is basing sideways here. If price drops down and takes out this cluster of activity here, so I would say if price goes to 155.50, no. If price goes to 155.45, we'll probably be left with a really nice supply zone up here and plenty of and some room below on this time frame. So there's a short-term, opportunity to the downside. In other words, let me put those levels in, even though we don't have the opportunity yet. So. Here you go. Whoops. Yeah, this is shaping up. It's shaping up here to turn out to be pretty good too. So, but again, to make this work, so we have a couple levels here. But if price is just churned here, I wouldn't sell short yet. I want to make sure that the buy orders sitting down here at 155.50 are, filled before we sell short. In other words, let price take out all this demand here and fill these orders, right? It's all about filling orders, and then we sell short when those orders are gone. Then you can get a kind of a clear move down to the 155.20s. Does that make sense? Okay, let's move on to another market. I can go to any market you want to. You guys want to take a look at we can take a look at the DAX, sure. It should be an exciting market to look at the moment. Okay, I've got some old lines in here. Let me get rid of that. That line's, there we go. So let's scrunch this up a little. Let's stroll left. I want to see what we're coming into here. I was going to shoot over to the NASDAQ, but we can do all this on the DAX. Well, we need more data. We haven't been here in a while. Let's do that. Okay. So we've got a little ways to go till we come into some of this stuff. On this time frame, your key supply zone is going to be right down here. So we're nowhere near that. So there's that, and there's that. So we're nowhere near that at the moment, so I wouldn't worry about that now. But what does that tell us? Right, so that tells me, let's go down to a small time frame, and even though the market's down a ton today, if there's some supply above, well, I'm going to keep shorting, and there is. Take a look, because now I know where the larger time frame area is in this market. So now I just came down to a 5-minute chart and start the search there. Certainly have an area of interest right in here. And remember, for those that are not new to the program, don't forget our very precise rules on how we put our levels in, our proximal and distal lines, the rules around that. So there you go, based right on the origin of that move. Okay. So yeah, if we do get a little rally up to where we were about an hour ago, I'd be comfortable taking a short position there. Now remember, for those of you that don't trade this market, make sure you understand the risk. This is a big money market, so don't just jump into this market without understanding how the numbers work in the DAX. Okay. All right. That's the DAX. Let's take a look. And we can go to another market here. I mean, I have a whole list of markets I was going to go through, but if you have a market you're really wanting to see, I have no problem. We can go to any market you want. I'm here for you. Sure, let's take a look at the euro. Okay. Oh, and actually, if it's okay, we've been looking at the euro right here. I think we have all our levels in. Obviously, in these FX Street sessions, we focus on the euro a lot. We've been very bearish the euro for the past, it's been a couple of years now. But so there we go. We do have this weekly supply zone here, and not a ton to stop prices from rallying up to at least close to that area. But I want to take you to a little bit smaller time frame so you can see what we're dealing with here. Actually, that's not the one. It's the hourly I want to take you to. So let's make this one the hourly. I want to share a level with you that I think you should pay attention to according to the rules. So we put a horizontal line up here just so we can scroll back. and we want to find that line. Here it is. Oh, we have the levels in already. Never mind. So remember we put this level in last time we were together. 113.50. And also this level here, I would watch it, you know, we kind of went deep into that level the first time, so I wouldn't be comfortable again. But the fresh level for the next big leg down in the euro is up around 113.50. Does that make sense? So watch the 113.50 area. That's 113.50 to 113.70. We have a stop in there at 113, about 81, 81. So that's your level there. Okay. Any other questions on the euro? While we're looking at the euro, though, let's take a look at the dollar. Here's the levels we've had in the dollar for quite a long time, for months. So take a look at that. Okay. All right, so here's the dollar. So again, we've been falling off of our supply level. We've been going over that here at the FX Street sessions. The level's holding up nicely. Demand is quite a bit lower, though on a smaller time frame, you're going to find a little bit, you know, some demand a little bit closer. I believe there's some down in here, this area. Okay. So, you know, dollar's got some room to fall. Euro has some room to rally up to that supply zone. Great, prices are moving. When prices are moving, they're not when we want to enter and exit position, enter positions. We're going to enter positions at the turning points, at price levels where objectively supply exceeds demand for a downside move, or where demand exceeds supply for an upside move. Okay. Sure, we take a quick look at the S&P. So the S&P is falling as expected. Again, I would not have entered that JP Morgan trade if I didn't think the S&P had plenty of room to fall. So whatever time we look at the S&P on, you're going to see there's quite a bit of room to the downside. You know, if you go with the daily, you've got some old lines on here I'll get rid of, but again, in the S&P has been flat to down for 8 months now, almost 9 months. There's been literally, you know, no gain or loss on the year in the S&P. So let's go right back to those areas. So they really have no demand until you get quite a bit lower on the larger time frames in the S&P. If we pull that down to a 60-minute chart, again, you're not going to find much here. We're going to have to scroll way back to see anything. So again, just like the DAX, let's just jump right down to the really small time frames. So again, let's go even smaller. All right. So if we do get a little bit more of a rally, keep an eye on this level right here. Okay, that level is sitting just above our rally-based drop supply. Yeah, Eugene, it does, but it's right at the beginning. So I think that's probably okay. It's right at the beginning. The rest of the level, you don't have that. It's when that candle is, you know, further along in the level. Okay. So you have a couple areas there, rally-based drop, followed by the level on top of that. Two of those levels sitting on top of each other, it's like, you know, again, back to my early days, that's two stacks of unfilled sell orders sitting right on top of each other. Okay. Anybody who buys after a period of buying and into supply is probably not going to do well. odds are stacked against them, which means odds are stacked in our favor. Make sense? Okay. So I know we're out of time here. Apologize for that. I try to get as much information as possible. I just put my email in the chat, sseiden@tradingacademy.com. If you have any questions, if you're struggling to achieve your trading goals and all that, just certainly shoot me an email. There's the email address again, sseiden@tradingacademy.com. I should be able to get back to you pretty quick. All right. So with that, we'll see you again really soon. And have a great day, everybody. Thanks. See you soon.